Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. Today, our guest is Chris Ward, who is the founder of EntryPoint Wealth Management. Welcome, Chris.
Hey, Gary. How are you doing today?
Doing great. So, Chris, tell us some about yourself and how you got into the finance industry.
Yeah, definitely. Well, first, thanks for having me on the podcast. I've listened to a few episodes. You've got some great content, so I'm happy to provide some of my background and information. First, I grew up in the tax business. So I learned that at an early age, 10, 11, 12 years old, kind of the grunt labor, all the way through double checking and then eventually preparing tax returns after college. Did one full tax season and I realized that was enough for me. So in 2005, I joined Fidelity right after tax season ended. It was actually April 18th. It was like the next day. I kind of left the family and spread my wings and went into the financial industry for good. And bring it all the way forward. I just started my own investment advisory firm over the course of the last 12 months. And, I really enjoy working with individual clients, families here in Cincinnati, helping them to achieve their goals. Oh, God.
So what about, the finance and financial planning is what really gets you excited? I mean, obviously you were doing taxes and stuff like that with the family, and yes, taxes aren't the most exciting thing, but what kind of really got you into the financial planning side of things?
Yeah. So for me, what drew my interest was really helping clients understand their tax situation and then make the right strategic investment to build wealth. So a lot of times, you'll have clients that have a CPA, or they might just have a tax preparer. And they're not getting the counsel that they need to pinpoint how they can achieve their long-term goals through the investments that they make. So there are times, obviously we'll recommend various retirement plans for the tax advantages. Maybe it's an HSA for a client to benefit from the tax advantages there through their company. But at the same time, I've recommended real estate, ventures that are going to provide clients growth and interest, but also potentially tax deductions as they invest.
Right. So, I mean, obviously, having the tax background has helped you with people and advising them what to invest in. What are some of the questions that your clients or potential clients aren't asking that you really wish that they would?
Yeah, so I would say the number one question that clients aren't asking is really to take a step back and understand that every individual that we engage with has their own set of incentives that they act around. And when you think about the financial industry, most of the time the incentive structure and what is motivating other financial representatives to provide advice is basically centered around selling products. And there's this lack of comprehensive engagement to truly understand, what does the client value and what are they trying to achieve? And then building a financial plan before we jump into products. And too often I've found over the years, clients will own an investment, they'll own an insurance product, and they'll just be confused as to why they own that product or why it's incorporated into their net worth structure without really understanding if it supports the objectives they're trying to achieve. I'm sure you've heard stories, Gary.
Oh, yeah.
Too many times clients are sold products that they don't need. And it's unfortunate, but it definitely happens. So as advisors, we have to pick up the ball and help them make the next best decision to kind of reformulate how they achieve going forward.
Right. So, going through that, what are, besides kind of blindly going through some of this stuff, what are some of the other mistakes that you're seeing, your potential clients before they come to you that they're making?
Yeah. So I would say the other component, and this is what clients do to themselves. So in my previous role at a large brokerage firm, I dealt with a lot of self-directed investors. And when you're making your own investment decisions, too many times I've seen clients, chase returns and even change strategy in the middle of the economic cycle. So clients would often try to find the next hot investment, right? Let's think of like, oh, I want to go out and I want to buy Bitcoin, right? That would be a hot topic for a do-it-yourself investor today. And the issue becomes once you own, Bitcoin, and let's say you bought it last summer, and now you pull up the price of Bitcoin and it's at 30,000 and you bought it at 50,000. Well, what are you going to do? Like you can't just sell it then and move on to something else, but you've got this investment that went completely wrong because you didn't really have the sophistication or the tools to manage the investment that you made. And so I find that's probably the number one thing that clients overestimate is their ability to invest their own portfolios, because you end up putting yourself in a bad position and not knowing how to unwind it.
Yeah, I've definitely not saying that there aren't people out there that can actually do this, but I do find lots of times that people are trying to take and hit that home run. They're looking for the next Apple or whoever, and instead of taking and doing what they do well to earn the money that they're making, they're trying to kind of do this elsewhere.
Yeah, I mean, a lot of advisors talk through like, you need to know your risk tolerance, and you need to do this and that, and that's part of it. But what it comes down to is it's like anything. If it takes 10,000 hours, according to Malcolm Gladwell, to be proficient and be an expert in a given area, well, that 10,000 hours of investment strategy and analysis, what that does is it allows you to formulate a set of rules from which you can make informed decisions. Right? You can formulate rules in which you will buy a given investment. You'll formulate rules in which you can sell a given investment. And so the idea is you have the confidence. Once you have that system in place, you have the confidence to make the right decision. But until you spend that time and have rules that you can implement consistently over time, then you're just driven by emotion. And emotion forces us to do the wrong aspects. Emotions force us to sell the market today when it's down 10% in the month of January. It makes us buy when the market's at a high, in the fall of last year, and just different things that we know aren't in our best interest, but we allow them to rule how we make decisions anyway.
Right. And I joke lots of times with people and tell them that professionals like you and me, we're really there to talk our clients off the cliff, and try to really take the emotion out of things, because as we all know, a lot of bad decisions are made when emotions are involved.
Completely. And the sad part about it, Gary, is when I talk to clients and we spend time on the front end to truly get to know each other, to truly establish what their values are, what their goals are, what sort of legacy do you want to create for your family, what information do you want to pass on to your kids about money, and you've accumulated all these assets. Nobody sits there and tells me, well, I want to spend 30 hours a week investing my portfolio, and then when the market's going down, I want to spend 60 hours a week truly stressing over if I will have enough money to live on or not. And for the clients that I work with, they're going to be fine, but it's truly about crafting a plan to where you have somebody on your side that's going to execute for you in the good times and also the bad times to put you in the best situation you can be.
Yeah. I mean, many times I try to tell my clients when we put together tax plans and things for them, it's like, yes, it's like, we kind of have now, we have our 3-year plan, if you want to call it that. Hey, this is where we're going to go. Yes, depending on what happens with tax law changes or things change in your life, yeah, we may have to take detours. But again, we kind of already have that plan mapped out, so we don't have to make knee-jerk reactions to things.
Exactly. And when a client gives you a set of circumstances of what they want to achieve, the kind of work that I like to do is to be able to lay out different techniques to achieve that objective, right? So let's take, for example, if we're building a plan for charitable giving, right? Too many times I see estate plans that include charitable giving after a client might pass away, right? We want to pull those into the forefront. We want to do stuff like even use the investment portfolio to fund the charitable giving, have a charitable giving strategy. And those are strategies that are available on, just general investments that you'll make in a brokerage account, or other pieces of property, in addition to, doing qualified charitable distributions from your IRA later in life. So you have these different pieces and different solutions that you pull off the shelf to achieve multiple mixes of what a client's goal might be, right? Lower taxes, charitable giving, efficient investing, processes. And so that's where, as a wealth manager, you're able to provide a significant amount of value to the clients you're working with, because you're helping them achieve so many different goals in different areas.
You've been doing this for a while now. So what is it that you wish you knew back then that you know now?
So the biggest thing, so I mentioned the idea of the environment in which you do your work. It can be a benefit, or it can kind of dampen the impact you can have for a client. And so over the course of the last year, I've been able to establish a solo practice. So I'm the only advisor at my firm, and chief compliance officer, you name it. But it's allowed me to build solutions to complex questions my clients have, right? So I'm lucky to have been around a lot of successful people, and a lot of the people that I work with today, their number one objective is retain their wealth and avoid paying as much tax as possible, right? We know the market's going to give us whatever the market is going to give us, but if we can reduce the taxation component, it really makes a big difference in the long run. And so I've been able to add some strategies that I really didn't have access to in my previous role at my previous firm. So right now I've got a couple clients that are in the middle of selling a piece of property. It's farmland. And we're looking at doing 1031 exchanges. And most of the time, you do a 1031 exchange, it's farmland, or it's active ownership, staying in active ownership. But there's a security out there, it's called a Delaware Statutory Trust, that allows you to take that active ownership and put it into an investment security and move into passive ownership. So I typically help clients retire, help clients kind of downsize their life, simplify things, and create a paycheck, right? So we're looking for income opportunities. And so that sort of strategy fits really well if you've managed rental properties your entire life, or if you've owned farmland for many, many years, and you want to basically sell that piece of property, reinvest in a security that's going to pay you interest. And then also, you're not going to have to go out and pay taxes on the capital gains. And the way that the tax rules are written today, it allows clients to avoid paying, in some cases, hundreds of thousands of dollars in tax, and be able to transition from being an active landlord or property owner and move into retirement and have a passively managed investment that's going to then pay them a dividend or an interest payment. And at the same time, it's going to have tax benefits that are going to flow through to their tax return as well. So that's an advantage that I was able to achieve, to be able to implement a solution like that I really never had access to in my previous life. And so I find that to be, part of the most exciting parts of my job today is client brings you a really complex situation, and you're able to take the time, engage with experts, and then turn around and have a phenomenal solution on the other side that can be implemented and help them, better their situation.
Right. Totally agree. And I think that's where, making sure that you have the experts in your corner is what really helps. And I mean, obviously you having prior tax knowledge, it helps you ask the right questions and really look at things, that's for sure. So, in going through, obviously you made this transition to be on your own, during COVID, which a lot of people would have probably said that you were crazy for trying to do that. what are some of the challenges that you have faced in making that transition from, working for a company and kind of, I'm going to say, being secure to, now you're living on your own, basically. So kind of what are some of the challenges that you faced with that?
Yeah, it's a blessing and a curse, right? I'm still facing challenges today. We're on month 16 of a maximum 18 months of COBRA health insurance, right, for the family. So that's still a pickle that we got to figure out here in the next, I guess, 8 weeks. The window is closing. It's when the pandemic hit, they sent us home in March, and I think it was by June 1st, I had told my wife I wasn't going back to the office. It was just time for me to find a new way to be able to apply my craft is kind of what I told her. And, I had conversations with different firms and different things that were out there. But, once I made that decision, it was easy. Once they invited us back to the office, I knew I wasn't going to return. So the resignation process started. And I would say, it's really tricky. I ended up not joining a firm, and kind of decided to go the lone wolf route, if you will. And I've been blessed to have some really good learning opportunities in the trade associations that I'm a part of, the National Association of Personal Financial Advisors. I'm also a member of the XY Planning Network. And, there are far more blessings that I can count versus the challenges that I've had to overcome. I would say that I've had to learn a lot more about the business side and the regulatory side of what we do. Multiple conversations with the folks at the Kentucky Division of Securities and just general compliance aspects of the work that we do, because we are highly regulated. And you have to run your business the right way, right? Unfortunately, there are folks out there like Bernie Madoff and others that have kind of given this industry a black mark. But when you're a state registered investment advisor, you've got a government entity that's not too far away that's going to be knocking on your door. And so I registered in February after 5 or 6 letters from the state of Kentucky. And then I actually was audited already. So I was audited in October of 21 as well. So I think that's been the number one challenge, right? Is the idea that the compliance aspect and the regulatory aspect of what you have to keep track of is a little bit more than I expected.
Yeah, I think it's one of those things. I know years ago when I decided to jump out on my own, it was kind of, it was definitely one of those things, you're taking that step. And, I looked at it the same way. It was like I got to the point where I was tired of making somebody else a lot of money and decided it's like, okay, I can do a better job if I'm doing this based on, what my rules are and how I feel that a client should be, handled, and not nickel and dime for everything, when they have questions and stuff. So it was definitely, a big step to take in, in getting through it. But it's definitely something now after 22 years, so happy that I did it. So
22 years in, I tell you, my kids are, I still have teenagers. So I've got a 15, 12, and 11. This past summer, we took a month off and we went on a road trip, like all the way to California from Kentucky by way of North Dakota. And we came back through southern Utah. There's so much to see in America, and we get so little time with our kids. And so, when I walked away from my previous role, I was probably working 60 hours a week, obviously managing a large practice. And it just really kind of reset for me what my focus ought to be. And it's just being able to spend time with your family and being able to provide value to clients in a way that allows you to achieve both objectives. Right. So I tell my clients, hey, you should expect that we should have, reasonable conversations every quarter. Right. I'll be in touch every quarter. And every May, I'm going to meet with every client in my practice, because probably in June or July, I'm going to be gone for a month. I'm going to take a month off. And it's allowed me to kind of structure my life in a way to where now, if I need to pick the kids up at 2:30, I can work 7 to 2. And
Right.
I can get all that I need to get done in those hours and then be able to have family time as well. So it's really been a blessing from that perspective.
Right. Yeah. Because at this point you've been able to craft the business the way you want and, take on the number of clients that you want. It
Exactly.
definitely makes a difference.
And it's one of those things where you can actually provide more value, right? If you're willing to have that Jerry Maguire moment and let me reset the relationship structure to where we're going to have a quarterly conversation. We'll get together in person, twice a year if that works for your schedule and your objectives. Yeah. So the first thing I really designed was to establish a client meeting, like a calendar of service, right? And I wanted to meet with clients quarterly. Too often we hear this idea, you should meet with your investment guy once a year. And when I was at Schwab, if we met once a year, when I was in my previous role, if we met once a year, clients were lucky.
Right.
And I wanted to make sure that I was providing a consistent engagement with the clients that chose to work with me in this format, outline annual meeting objectives to where we'd have agendas for your second quarter meeting. And when we review your retirement plan in the third quarter, we'd have an agenda for that. And then when we do our year-end planning in November, we'd have an agenda for that. And we know that agenda starting in January because we're able to plan this all out so that any topic a client wants to dive into, we're able to set a time frame where this is going to be a conversation for us.
Right.
So right now I'm talking to clients a lot about estate planning, a lot about their maybe property and casualty insurance, maybe if they have aspirations for college savings. We're doing some of that conversation in the first quarter because we already know the topics that we're going to discuss in the second, third, and fourth quarter of the year. So it provides that opportunity to make sure that everything a client needs to discuss, we have ample time devoted to those conversations.
Yeah, I think the idea of having I'm going to say an agenda for each one of your meetings is important because then that also allows the clients to put out there for this agenda, hey, these are some things I would like to cover and questions I have. And I think it helps you make sure you get through everything and the client doesn't feel that you rush through a meeting and then they didn't ask the questions that they really wanted to ask. So if you get that ahead of time, it always makes it much easier, I think.
Completely. And the great thing is these agendas are actually in our financial planning software.
Mm-hmm.
So clients can pull them up, they can look at them, they get email notifications. It's 2 weeks out and we need to schedule a meeting and here's the agenda that it's going to entail.
Right.
So I have found it to be a good opportunity to where clients can even raise their hand and say, we need to add this to the agenda. And you're enabling them because we're all here to serve, right? So we need to know what is their most important topic at any point, and that's going to change. And so putting or giving them the ability to make sure that is known, I found to be something that's very empowering for the clients I work with as well.
Yeah, I agree wholeheartedly with that. So what this year, kind of what's your goal for 2022?
Yeah. So I have a number of goals, obviously, a couple, as far as on the business goals, one of my main objectives, I'm hiring a virtual assistant.
Mm-hmm.
So I've chosen to kind of set myself up as a solo, but you need help in various aspects of what you're trying to do. I'm not the best guy when it comes to operating a website and design and some of those aspects of what needs to be done. And, I've already got compliance assistants kind of built into the XY relationship and other pieces. So bringing on some help to make the business more efficient is really important to me. From a growth perspective, the interesting thing is, once you get the machine built, you don't have to necessarily grow, right? You can take clients as you see necessary and as you see fit. In my previous role, it wasn't uncommon. Manager would walk in October and November and say, all right, Chris, over the course of the next calendar year, we need you to bring in $75 or $100 million. And you'd sit there and say, wow, how am I supposed to do that? If I just grow my firm by 3 or 4 clients, revenue is going to take care of itself, and everything's going to fall in line. So it's a much different environment that I'm in today. There's so much less stress than working at some of these major financial institutions that are really just trying to squeeze as much as they can out of you with expectations and objectives. So, obviously, I set a goal of maybe 3 or 4 clients or a revenue number. And as luck would have it, Gary, I get a phone call the last week of the year, and I've got this large real estate case that I indicated, and I've got another couple clients, and now you're going to achieve what you expected to do over the course of the entire year, and in the first 2 months.
Right.
So it's very. I recognize that you do things the right way, you treat people the way they need to be treated, and you provide massive value to folks, and everything else kind of falls in line. And I feel blessed to be in the situation that I'm in today.
Yeah, no, I agree with you about that. So, Chris, what have I not asked you that you wish I had?
You told me you were going to ask me this. So, I feel like you did a very good job of asking me these questions. I feel like the one thing, let's say that the last piece of advice that I have for folks listening to your podcast is, we talked about, I think before we got started, the idea of, if you're hiring an investment advisor and you're paying your investment advisory fees, and no matter the size of your investment portfolio, you should always feel valued from the folks that you're working with. Right? You should always feel like they're willing to take your phone call, they're willing to schedule a meeting and devote the time it takes for you to feel comfortable and feel like you're being successful with their relationship. Too many times, you have a client that's paying $10 or $20 or $30,000 in investment advisory fees, and then I hear things like, "Yeah, they don't like to talk to me," or I had one client this past year who said, they were willing to help me to organize the inheritance I'm going to get from my mother. Oh, so wait, so you're an investment advisor, and this is a large investment advisory firm here in Cincinnati. You're going to obtain more additional assets from a client that you're already charging, let's just say $10,000 a year in fees. You're going to get more money to manage and charge more fees on, but you're not willing to help every aspect of what the client is asking you for. And so in my mind, I want to provide a relationship that clients understand. I'm here to help you achieve your life goals. I'm here to help you achieve your financial goals. And any complex financial question you have, I should be getting that question, and I should be the center person that you come to answer that. Right. And so for that client, it was easy. Hey, let's sit down and let's organize this. And yeah, did it take 5 meetings? And did I have to create a custom Excel spreadsheet? Because yes, her mother was successful and saved a lot and had different pieces of wealth. That's just doing your job. That's providing the value that clients are asking for in the long run. So.
Yeah, I agree. And I think that the people that aren't willing to do that really shouldn't be in this business. My 2 thoughts on that. So Chris, if the listeners like what they hear and they want to reach out to you and talk to you, how can they get a hold of you?
Definitely. Thanks. So I'd recommend clients first go to my website, which is EntryPointWM.com. So EntryPoint, W as in wealth, M as in management.com. But I'm on, social media as well. So LinkedIn and Facebook and whatnot. And it's interesting. I just got my first referral through my website just a couple of days ago, and so, most of my referrals or most of my clients have come through, local professional relationships.
Right.
They are CPA, and I've got a couple of attorneys that I work with. But, growth is something that comes naturally. So if you've enjoyed the podcast, want to have a conversation, I've always said over the years, I've got time to help anybody out. So wherever you're at in your life cycle and saving and building wealth, or operating your business and wanting to understand how can I squirrel some money away or manage cash flow or debt, whatever, I've always got time for folks that need help, and I'd talk to anybody in regards to that.
Great. We appreciate it. So we really appreciate your time this week, and your wisdom.
Thank you, Gary. I appreciate the chance to come on your podcast.
Great. So this week, our guest was Chris Ward, who's the founder of EntryPoint Wealth Management. We'll see you next week.